What's going on, guys? Who's ready for some excitement? AMD. No. Zachary, I was on vacation. I was in LA for the weekend, but I'm back now. Keeping on regular trading hours until 4. Simon says over 20. We'll see. We'll see. This is what I'm most focused on right now. So we're going to do this. Anjo, nice of you to join us. Very nice call on UPST yesterday. Forgot to buy it open, but glad I hold on to my rules not to buy if it moved much in the first few minutes. Yes, by the way, listen, most of the time it is not a good idea to buy in the first couple of minutes. Andrew, what's up? Most of the time it's not a great idea. This one, pure luck, so don't think too much into it. But I mean, yesterday we saw the sold puts. UPSD exited its gamma squeeze. And it was just it was a pretty convicting trade, I would say, especially with how LDPM looked and how the data looked. Oh, whoops, I meant to. Lala, how's it going? Good to see you here. Okay, so what do you guys think happens? Give me your predictions. Where are we? I'd say we're about right here right now. So we got purchasing support above. So remember, guys, if we do go up, expect some acceleration higher, some additional acceleration higher as price moves into this purchasing support. And if price drops, that could be really ugly. As price will fall straight into the selling pressure, can put the stock right back into a gamma squeeze, and that could be troubling for the future. So I would say this is probably one of our most important earnings calls. So just to go over again, if you guys remember last earnings, the heat map was flipped. So the selling pressure was on top and the purchasing support was below. And that's why I was very adamant about not holding on to any calls going into earnings, because even if price would move up, it would move up right into this nasty selling pressure. And in fact, that's exactly what happened. Price did move up on earnings, went right into the selling pressure, which I think started at 29. Price moved up to 29 and then came right back down to 20. So this earnings, we see the exact opposite heat map with selling pressure below and purchasing support above. And if you guys remember 2 earnings ago, when we actually went up on earnings, this is the heat map that we had. So obviously, what I'm not trying to say is that because it happened last time, because it happened 2 times ago, it's going to happen again. All I mean is simply that This is a heat map that is conducive to a large upside earnings move, while the other heat map with selling pressure on top and purchasing support on bottom is not conducive to a large upside move. Now, just because it's possible to have a large upside move, in the same way, it's also very possible to have a large downside move. And so, very simply put, whichever way we go, based on the heat map, it seems that we're going to continue to accelerate in that direction. So, just something to understand if you are playing options going into earnings, that whichever way price goes, it is more than likely going to rip in that direction. Now, we do have some clues on what to expect. So VOX is actually a very healthy looking VOX. And although VOX can't necessarily predict earnings, it is fairly nice to see a stable looking VOX into earnings. Now, if you guys remember this time, on this earnings, we were seeing price moving higher while VOX was moving lower, signaling bearish divergence. And sure enough, earnings took us right down. You see this nice VOX bounce right off the propagation line, and price was able to bounce with it. But if you notice VOX and you notice price, there was a massive divergence going on with price moving higher and VOX moving lower. That was in fact bearish leading up into earnings. This time VOX actually looks a whole lot better, a whole lot more stable. So that's one thing we know. Then we have the heat map, which all it tells us is that to expect a strong move in either direction. Last heat map told us that if price is going to go up, it is more than likely going to come straight back down. And the snap graphs can't read into that too much. Now, here's what's interesting. There's a huge increase in put buying, very big increase in put buying yesterday. And what we've noticed, what Justin figured out, is that when retail bets largely in one direction leading up to an earnings event, usually we'll see the inverse happen. So if retail is buying puts, usually we'll see the stock go flat or move higher. And if retail is buying calls, then usually we'll see the stock move flat or lower. So in this case of GME, we do see a large increase in put buying, which can very well mean that exactly the opposite is going to happen, meaning the stock is going to go up on earnings. Okay, so the market closed. Let's go here. Let's turn on extended trading hours. Okay. Now, another thing we see is that our put sellers did not close out their puts yet, which is pretty significant, I would say, because if they expected downside on earnings, then more than likely they would have closed out their puts. From the fact that they didn't close it out is a little bit maybe of a hint that they are expecting upside here. Now, another thing is that they could have technically closed them today, and we wouldn't really know about it until later tonight. So that's the only thing that kind of irks me about the whole situation, is that they didn't close out their sold puts yesterday, but it's possible that they close them out today without us knowing. We'll only know at 6 p.m. Now, the thing is, with big money, they don't usually play it same day. That's why when we see sold puts on the report, the huge move usually happens the next day. Why? Because when big money positions themselves, they don't like to get in the same day as the move is going to happen. They like to be there before. And in the same vein, that's when they close out their positions. So I would have expected them, if they expected earnings to go down, I would have expected them to actually close their calls yesterday. Buy back their sold puts yesterday as opposed to today. But again, could be I'm reading into it too much. That's just the way I would personally interpret it. So I guess we're about to see what happens. Whatever does happen, unless we're completely flat and we stay in the gamma neutral zone, which looks to be between low 18s and high 19s. This, I would say, is the gamma neutral zone. So as long as we stay in this box, now I wouldn't expect too much action. So if earnings, for whatever reason, there's not much of a move, and we just stay in that box, then I wouldn't expect much to happen. But if it goes above or below either of those levels, that's when I would start expecting a greater than usual move to occur. So if, for example, price starts to move above here, I would expect a pretty massive upside as dealers become forced to hedge their positions by purchasing more shares. And if price moves below this box, I would expect some pretty significant downside as dealers are forced to hedge their positions by selling shares into the market, furthering the selling. So still no action. Maybe in 5 minutes maybe in 2 minutes at 4:05, we'll see it start. So as you guys know, my personal play here was selling the 17 puts. Now, it's kind of like a win-win for me, as you know, we wrote on Meme Stock Watch yesterday. So I'm not a gambler. I don't like betting on things out of my control when I can make money when the market is open. However, due to the fact that I would buy GME shares at 17 without hesitating, I sold the weekly 17 put. If price gets, if GME goes up on earnings, I'll buy the puts back for pennies or they'll expire worthless. GME drops below 17 on earnings, I'll have more GME shares at 17. So for me, that's a bargain. So I don't mind, if I lose, if price goes up and my puts expire worthless, fantastic, because that's free money. And if price goes down and I have to buy more shares of GME at 17, if GME would go to 17 tomorrow, I would buy more shares anyway. And so, to me, it just seemed like the safest way to play. Now, of course, that doesn't mean it's going to work out, but whether it does or it doesn't, I'm definitely fine with the outcome. All right, I think we got 1 more minute, and then we'll probably see it start, unless GameStop is going to release later than usual. Christian says 22. That would be nice. I would have no complaints. All right, so it's starting. I see 1898 right now, 1950. So listen, if we move into this green box right here, that's when we would expect, upside to start accelerating. While we stay in this white, there's nothing really exciting because from the dealer's perspective, they're completely neutral. And so there's no need for them to do anything. However, if we move into this green, that's when we can start seeing something pretty incredible. And we're actually pretty close to it right now. So we'll see. Usually as price starts to leave the gamma neutral zone, that's when we'll see it be brought back down, which is actually exactly what just happened. And, kind of similar right here, when it starts to hit the selling pressure, we can see a bounce as the dealers are going to do their best to keep it inside the delta neutral zone. So you guys see it bouncing around. I drew these boxes before. The price is actually bouncing right inside of our gamma neutral zone. So you guys see that? Stops right at the purchasing support, stops right at the selling pressure, because this is where, it's cheapest for everybody to let price be. Now, if price breaks into our purchasing support or into the selling pressure, that's when you can expect a real move. So I just like the stock says they beat EPS and rev. That's very nice. I don't have any information to that right now. I'm only watching the screen. GameStop second quarter net sales 1.16 billion, estimated 1.14 billion. That's nice. And GameStop second quarter adjusted loss per share 3.0C, estimated loss per share 14C. GameStop second quarter proceeds from sale of digital assets 1.5 million, minus 98% year over year. I actually kind of thought we would beat based on, all the games that came out last quarter. So I did have a good feeling we would beat. But doesn't look like anything spectacular. So again, still in the gamma neutral range. Where did here it is. Let's bring this back. So again, this is where it's easiest for everybody if they leave price right here. Now, just keep in mind that, oh, wait, is it over? There's no earnings calls, right? Is there an earnings call? I honestly don't know. But either way, this is, a nice firsthand experience for you guys to understand a little more in depth how much our stock and stocks in general are affected by dealer positioning and dealer hedging requirements. And so from this case, we drew this out, before earnings started, obviously. You guys could see how price rejected the purchasing support and price rejected the selling pressure almost to a T. Obviously, my boxes are a drop off, and price rejected probably uh, more the accurate selling pressure and the accurate purchasing support. But if this is it, that was pretty lame. So no call. Listen, you know, it's easy to say leaving their investors in the dark. What else is new? But at the same time, me and you are retail people. Unless you have a lot of experience in corporate and in large companies, billion-dollar companies. For me personally, I know my strengths and I know my weaknesses, and I know that the people in charge probably understand a lot better than me when to have an earnings call, when not to have an earnings call. And so instead of questioning management's decisions, if I'm investing in the company anyway, I like to just trust management's decisions because that's why they're in their position and I'm behind a screen in my apartment. That's just my personal thoughts about it. I definitely understand the logic and the reasoning for being upset about being left in the dark. So if this is all the action we're going to see, it's kind of boring because the chance of extreme volatility was certainly here. All we had to do was leave one of these boxes. So I guess we'll stick around for a couple more minutes, see if there's any more price action. But if we're just done at 19, then I don't really got much more for you guys unless somebody has any questions that you want to ask me about anything. I wouldn't mind that. Don says, if we're in the dark, so are the predatory shorts. That's a good point. Breyer, my November 20s are just lingering. Is the second quarter not the worst quarter typically for GME, and it improves in quarter 3 and quarter 4? I think I've heard that based on the console cycle. I think I've heard that, but yeah, not really sure. I trust RCM personally. I recognize we are part of a much bigger play. No worries. I mean, listen, it's a little bit contradictory to place your money in somebody's hands without trusting them. So, for example, if I don't trust a certain CEO of a certain company, I feel like he's not making the right decisions, not giving me calls on earnings. Well, the last thing I would ever do is invest money into that company, because when you invest money into a company without, directly doing it, what you're essentially doing is putting your hands in the CEO's hands. And so if you are investing in a company, by your actions, you are showing that you trust your CEO. And so, if you have a seat on the board, you can definitely question his actions. But without that, you don't like it. If you don't like him, if you don't trust him, no need to invest in him. So is this really going to be it? Because if so, that would be a pretty disappointing end to all the anticipation and the hype. But listen, hey, the good news is that GameStop is up 24 cents after hours and is not down a lot after hours, right? That's the good news. If somebody knows that this is it and we're not going to have more price action, please let me know. But I'll stick around and drop longer. Who knows? Maybe something will happen. But you guys see how well dealers contain this move right into the gamma neutral zone. So that's just expert dealer positioning right there. Very expert dealer positioning. The only thing left is the 8K to review. Oh, whatever happened with the DRS numbers? Are we gonna get those? Once the filing comes out, there might be more action. All right, let's stick around for a bit. Stick around, we'll hang out. Maybe we will get some excitement. Breyer says, I still have my first shares purchased at 226 prior to January 28. Wow. Those are some memorable shares. Okay, so 1936. So what did we say? Yeah, above 1981-ish puts us into that purchasing support, and then we can probably rip towards 21, 27 first stop, and then if we get through there, probably go to 25. But that's contingent on, moving into this purchasing support, dealers starting to be forced to hedge and pushing the stock price up higher. Keep an eye on Form 4s over the next couple of days. If insider buying continues, could be a catalyst. Oh man, I saw a bunch of covered calls on AMC when it was at 220, and in the following week it ran to 18. So what happened? Did you just lose your shares, or did you roll them out? That sounds like a nightmare. Damn. Well, I'm sorry to hear that. That doesn't sound fun. Okay, so listen to this, guys. The wick finally appeared on Robinhood. So the high was 1977 and the low was 1783. So high 1977, which is exactly what we drew before the call started, and the low was 1783. Yeah, a little bit outside, but same idea. Again, understanding dealer positioning is only going to help you understand the way your stock moves more and not less. Yeah, no big deal, only lessons. Listen, that's the time that got you into the stock market like this. So I could only be thankful for it. I've made some pretty bad decisions myself back then. There was a lot of excitement and hype and something very new that came into the world. And so I don't think, you'll probably, or no one probably will ever sell $2 calls on a stock and the stock will rip to 18 in the next 2 days ever again in the market. So, you were part of a 80 Sigma event, I would say. You could take some pride in that. Tell that to your kids. But definitely not something you should be ashamed of or embarrassed of, because that is not an event that was expected. So looks like price is hanging out at 1930. I'm seeing now. Is MOAS no longer happen? Good question, Ken. Happening. It's a very good question. What do you guys think? Imagine a new source of rev for the company. Yeah, that would be helpful. All right, 1962. So we may get ourselves a miracle here. Stay tuned. Listen, all we got to do is push into this purchasing support. So we're talking about 1969 now. We're talking about another 10 cents, and we'll be in this purchasing support. And from there, we can see something crazy happen, guys. We could see something wild. So stay tuned. Here we go. 1990 now. So they're going to try to keep it away from this purchasing support right here. So, you can expect rejection right at this level, this like 1980 level. But, if buyers are persistent and we get in here, then that's going to be pretty incredible. So you won't see support and resistance lines anywhere that are telling you to watch 1980, that area. But our gamma hedging heat map identifies it as a resistance area due to the fact that dealers want to keep this contained in the delta neutral, in the gamma neutral zone, which is this white box that we have labeled. So you guys just saw that second rejection of the purchasing support as dealers are trying to keep this thing contained. But that's not to say that we can't get in here. It's just to say that it's not going to be easy. A large surge of buying pressure is going to put us in there no matter what the dealers want. So back again in 1980. And let's just see. Smell that? That short's getting roasted. It's going. All right, up 5% so far. Not too shabby. So that was essentially, let's just review my thesis from yesterday real quick. All right, so we start off with the heat. We start off with VOX. VOX is looking bullish as it climbs higher in a calm manner with no spiking, very important, into the stability zone. The fact that VOX isn't spiking with the latest upside is telling us that the market is tolerating the latest upside moves well, something we have not seen with GME in quite a while. I mean, just look at the chart. This is pretty unusual, but in a good way. What I meant there was that this latest upside move, VOX moved quite nicely, quite calmly, up into the stability zone. Now, if you look at every other upside move, all spiky, right? Spiky leads to eventual downside. Spiky, 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 spiky. The first time in forever, we were seeing VOX actually start climbing slowly towards the inhibition zone, which means that the market is finally tolerating upside moves from GME well. In the past, every time GME has made an upside move, the market clearly did not tolerate it. Then we went into the heat map. The heat map shows that whichever way price moves on earnings, move is likely to be accelerated. And then we said what we said earlier, that the last time GME had earnings, the heat map was flipped with selling pressure above, and that's why I warned strongly against holding on to calls into earnings. But 2 earnings ago, when GME had the same heat map, it moved strongly to the upside. Snap graphs are overall bullish. The options table shows that sold puts have not closed out just yet. This is very, very telling, as they are holding them as the IV is rising, right? If you sell contracts, why would you hold them into earnings if IV is rising? That should be the last thing you'd want to do, unless you know that price is going up. So they're expecting price to continue to increase. The only danger to this thesis is that they may close them tomorrow and we won't know till after market, but big money likes to move one day ahead, not the same day. I'd be a little surprised if we did see that. And by the way, we'll know in 2 hours. So I'll post in 2 hours if they held them or if they did indeed close them. For now, we have to focus on the sold puts not being closed out, as the put sellers expecting more upside. That was very important, right? So we originally saw the put sellers come in at 1750. So that's why we went long on this break, and we hit our target perfectly at the daily trigger. So this was a very nice trade. And although it was my target, the put sellers didn't close out yet. So if the put sellers, opened them up here and still didn't close even when we hit our target, that should tell us that there's more upside coming. There was also a large increase in put buying by retail. So retail was betting bearishly. If you follow me long enough, you know that whenever retail bets largely in one direction on an earnings play, odds are that they lose. This theory has been tried and tested with very solid results. Therefore, putting it all together, I'm expecting bullish price action over earnings. Now, I am not a gambler. I do not like betting on things out of my control when I can make money when the market is open. However, due to the fact that I'll buy GME shares at 17 without hesitating, I will be selling the weekly 17p tomorrow before earnings, or if price gets an hourly close above 90.24. GME goes up on earnings, I'll buy the puts back for pennies. Hopefully, if we can keep this move, the puts will expire worthless. And if GME drops below 17 on earnings, I'll have more GME shares at 17. To me, that's a bargain. This makes this play a win-win for me, and that will be my plan going into earnings. And listen, if we keep this price, then I won. So it's a win-win for me, and I will have won, as long as, we don't get crushed. Okay, so now things are starting to get exciting. Now we're starting to poke into this purchasing support right here. And so let's see if we can get a GME miracle right here. So you guys see this? We are starting to poke into that purchasing support. You guys could all see that prices, stopped right here, right before the purchasing support kicks in, obviously for good reason. $19.90 exactly. Shit's gonna leave a gap though, right? Yeah, it'll leave a gap, that's for sure. And back down 90.70. Yeah, I mean, listen, this is exactly what the dealers want. If you were a dealer, this is exactly what you'd want as well. But dealers don't always get what they want. They try to, but not always. And so let's see if we can push above 20, because then we might witness something absolutely crazy. So I would say if we push above 20, the first target would be here, the weekly trigger at 21.30. And then, if we push past there, really the sky's the limit. So we'll see. We could be 20 cents away from glory right here. All right, here we go. So looks like we are finally making our entry into the purchasing support. And now let's see how this goes. So Christian says, if the dealers are protecting the 1980 point, wouldn't they be even more fucked if it breaks? No, not necessarily. And the reason why is because they're hedged. So they're not F, they just have to hedge right now. And so if we continue moving up here, what you're going to see is dealers having to hedge by purchasing shares, which will continue to bring price higher. So I think we just broke into purchasing support. I'm not certain because it can still come back down. But again, once we start moving into this purchasing support, we can see price move up to the weekly trigger at 21.30. So 20.50 now, 20.36. So currently, what we're going to see right now is dealers scrambling to buy shares to hedge their positions. Now, they didn't want to go in there because they didn't want to buy these shares, but now they have to. So these price jumps that you're seeing are dealers that need to hedge their positions, and so they're coming into the market to buy shares. Now, if I remove our boxes, we don't need these anymore. I do want to point out that, this isn't the thickest purchasing support. It's not exactly like you could see, it gets thick up here at like the 25 level, but this is moderate purchasing support. So we can see some buying, but again, the logical target for me would be the weekly trigger right here at 21.31. That would be a logical first target for me, especially now that we're all the way up here. The chart's a little off. 20, yeah, we're right here. So if I make this dark again, you guys could see this is still kind of minimalistic purchasing support. It's nothing crazy. It's nothing super strong, but it can get us up to that weekly trigger at 21.31. I would expect that to be the next target here if we continue pushing. But if again, if you guys want to see something really crazy, we would have to start moving up into like the 22s, and that would make the purchasing support a whole lot stronger. So definitely a nice start. And any sudden bursts of price increase will be dealers scrambling to find shares to hedge their positions. So again, logical target here would be 21.38, 31 for me. See if that gets hit. And that's where I would expect some pretty significant resistance. We know sellers are hiding out there thanks to our negative weekly velocity. So you can see negative velo pretty strong with minus 0.2. And so when we do hit 2131, we would have to expect sellers to come in based on our velocity. And now we're seeing price climb to 21. Again, this is simply dealers being forced to purchase shares as price broke out of the gamma neutral zone and into the purchasing support. So it looks like 2115 here, and we should be about to tap the weekly trigger. Now, if we do get through the weekly trigger, then we see price move into the thicker purchasing support. That's when that's when we might really get lucky. But again, the weekly trigger isn't something to the penny like the hourly and the 1 and the 5. It's more of an area. So I'm not sure what the high was exactly. One of you guys could let me know. But it was close here. I'll remove this for a second. Close enough to the weekly trigger where this is, considered a hit, even if it doesn't actually tap it. I mean, it moved through the daily trigger and got to the weekly trigger. So our first target was hit. Whether it actually tapped it or not, that's not significant. We know based on the weekly velocity that sellers are going to start stepping in big time right here. 21.20 was the high. Yeah, 10 cents. So that checks out. That makes sense. So let's just move this a little back here. Okay. If you guys are enjoying the stream, you would leave a like. That would help. I would appreciate that. But no pressure, obviously. So I'm going to expect some pretty strong resistance right here at the weekly trigger. I don't think we can get through, even with this purchasing support, because again, the weekly velocity is telling us that sellers are just waiting here to sell this down. And I sent out a tweet a couple of days ago, but I realized I have to stop tweeting because it's really taken away value from Meme Stock Watch subscribers. But sent out a tweet, break above the daily trigger, you know what happens next. And what happens next is that price moves up to the weekly trigger, which is exactly what we saw happen here. It happened after hours, so it wasn't that easy to play it. But nevertheless, it did happen. It broke the daily trigger, moved right up to the weekly trigger. $10Q. What's that about the 10Q? Yeah, Peter. So someone reached out to me about that, and I'm gonna need to apologize to the Meme Stock Watch subscribers. I was definitely taking away the value there. So I do apologize to all you guys watching here, and just a general apology. I was just trying to share things because I kind of figured like right about here is when I kind of figured out what was going to happen next based on the data, based on BOEX, based on all our data points we had. Like I was pretty confident we were heading up to the weekly trigger, and so I was trying to like hype up the move and show everybody that we're going to reject the daily trigger and they're going to give us a hard time at the daily trigger. Then we're going to break through and we're going to rock it to the weekly trigger. That's basically what I was trying to like show Twitter, like just trying to prove that like all that BS about you can't track GME and stuff like that. Come on, it's got to stop. So that's the reason why I did it, but I definitely won't be doing it in the future. I didn't post anything today. Someone reached out last night. So now our target is fully hit, 2146, and you guys can see, we're in some decent purchasing support. It obviously gets heavier right here at early 22. So watch out for a move above there to keep accelerating higher to 25. So I'm proud to say that this did really well, this report. So, again, we had to expect that rejection here at the weekly trigger because weekly velocity is negative, and so that tells us that here's where the sellers are waiting. So this purchasing support, the hedging got us up, did exactly what it was supposed to do, moved us up to the weekly trigger. But then, of course, this is going to be a big level. That's where sellers are going to step in. So we may thrash around here for a while. I don't believe we'll see a sustained move above the weekly trigger. I think, negative weekly velo is a little too strong to try to say that price is going to be able to break through. I don't know for sure. I can't give you a absolute answer, but that's what I would say. We hit our target. We did all right. And I would say to expect serious resistance here. Now, again, if we start pushing up and then we get to 22, where we start moving into thicker purchasing support, then dealers are going to have to start hedging harder and harder and harder and purchasing shares. And with a illiquid stock like GME, price moving into purchasing support is quite a big deal because I don't think there are many shares to be found. And so even smaller amounts of buying, smaller amounts of purchasing support can lead to bigger price movements. This is our third earnings in a row for GME that we've hit. We hit it 2 times ago, we hit it last time, and now we hit it again. Are you going to play the downside tomorrow ASAP to fill this gap? We'll see what the data says tonight. It'd be pretty crazy if people were posting not to buy calls going into earnings. Yeah, so good thing retail bought puts instead. And that's why we went up because, again, there was almost no call buying into earnings, which was very helpful for price to actually be able to move up. So like we explained earlier, when retail bets largely in one direction, they tend to lose. So over here, they bet largely short. So retail was heavily short going into earnings, a 278% increase in put buying, and retail did not buy any calls, or at least not significant amount enough for them to want to make those calls expire worthless and push it down. So I hope that message was able to help push up GME, because if there would have been a lot of call buying, this price action that we're seeing right now more than likely wouldn't have happened. And of course, the expected price range was 13 point something percent. And so because GME has only moved about 11% right now, those calls would be down in value tomorrow regardless, because GME did not meet its expected price range. So retail at large not buying calls was not only good because it didn't tank the stock, which it would have if there would have been a large amount of call buying, but it was also good because they all would have lost, and they all would have lost value. So yeah. Peter, thank you, James. You're teaching a lot. I appreciate it. I'm trying. Lala, first earnings since boot camp. Thank you. So 220. Okay, 75.4 million shares. Okay. Um, Cody says you guys are effing wizards. We're not wizards. We just have good data to rely on, and data usually works. Breyer, do you believe it could be a possibility that AMC was always a hedge? Also, is the is the Adam Aaron guy really that bad of a CEO or just clueless? Why dilute at lower prices instead of fixing the debt? These are fantastic questions. I don't think I'm the right guy to answer you. I'm just a data guy and a trader. I don't have those answers. Last quarter had approximately 76.6 million shares DRS, so it went down about a million. So it's safe to say at this point that the float is never going to be fully DRS. Huh? All right, so perfect rejection off of the weekly trigger. Looks like the excitement is done for now. Yeah, so coming down hard here. So again, I mean, look, definitely some very strong negative weekly velocity. So the weekly trigger was, of course, going to act as resistance, like we see here. And at the end of the day, the point is that the 17 puts that I sold, unless GME magically drops another 15% right now, are going to expire worthless. So that's a win in my books. And I don't like when big upside moves happen in after hours because they're a lot harder to capitalize off of. Instead, I'd much rather them happen in regular hours where I can actually trade them. And so this is pretty much exactly what I wanted. Confirmation that here's where the sellers are sitting right by the weekly trigger. That was good confirmation. My $17 puts to expire worthless. I'm sorry to whoever bought those. And now I can actually play the upside move instead of having to watch it happen in after hours. This after hours move won't mess with weekly velo, right? It won't, but today is Wednesday, and as long as we are higher than we were last week, as long as we were higher than 1819 on Friday, we'll be able to repair weekly velocity for a second week in a row, which will be the first step into getting a break above the weekly trigger eventually. So I'd like to thank everybody who tuned in to watch. Really appreciate you guys and hope everybody has a great day. And I hope even more that you guys are able to learn something new today. Have a good one, everyone. Brandon, Cody, just like the stock, Lala, Andrew. Thank you guys. Thanks for tuning in. If anybody else wants to say goodbye, you can do that. Phantom, Ala Bali, Deuces, Stefan Andrews. Have a good one. I'm just staying for the goodbyes. You guys could go. All right. I'm out, everyone.